Hello, everyone, and welcome back to Crypto Unplugged. For those joining us for the first time, I'm Doc, and alongside Oz, we're your guides through the ever evolving landscape of crypto and the blockchain space. Here at Crypto Unplugged, we dive deep into market analysis, exploring the innovations and trends that shape the future of finance. And today, viewers, we're tackling a strategy that's essential for everyone serious about navigating the crypto markets with confidence, and that's dollar cost averaging, or DCA. We'll unpack why DCA could be your safest bet in crypto, smoothing out any volatility and potentially maximizing your returns over time. And if you're new here, make sure you hit that subscribe button and ring the bell for notifications, because we're your go-to source for everything related to crypto. And if you've got any questions or thoughts related to DCA, drop them in the comments below. We thrive on community engagement, sharing unplugged insights and fostering a space where we all learn and grow together in this space. So Oz, before we go to get into this DCA subject, could you provide us and our viewers with a quick update on Bitcoin? I mean, what are the current trends and what might we expect in the near future?
Yeah, so let's get straight into it. And I want to give this is like a longer term view, and these are the levels I gave at the start of August. I think it was around, the first day of August. So these are just like monthly trends. And what I said was that I think, so if we look at the 1st of August was around here, right? So I gave these three levels. So this was the low, the midpoint, and the high of what this month could possibly be. And obviously a lot of people were they didn't think that Bitcoin could go all the way down to like 50,000, which it did. And once it got there, I remember that day clearly that people were thinking it's going to go down a lot lower, but that was just the low of the range. And now coming into the end of this month, where we've got past the midway point, whether we hit the top, because there's not much what we in the 24th of August, it's about a week left. Will we get that push to the top of the range? I'm not so sure at the moment, but regardless, I think we will get there eventually, possibly in September. And this is the other thing I wanted to show, was the 618 time fib. So the 618 time fib, every time in the cycle when Bitcoin gets to that 618, you normally have a really strong up momentum shift. So we go back all the way to 2013. It happened in August, the 618, and you had that top coming in, in November. Back in 2016, in November, you had the 618 come in there, and then we had the top again in, a year later in December. The last cycle, we had the 618 come in October, and again you had the top come in, around April. Although you'd had a second top, but that's not why it classifies the true top. And now coming in, take that off. Yeah, coming in now is that we're coming into September is a 618. So again, will we get that, top, that up only phase, or considerable phase where the market goes crazy? And I think if you look at all cycles, you see once it hits this range, it starts, you start going parabolic. And what's interesting about all these phases, well, you're near the top of the old all-time high. So back in October, you're around 14,000, which was the monthly sort of close of that range. If you go back to even November 2016, you're close to the top of the cycle. And even back here, when in 2013, you're close to the top of the previous high. So if we look at where we are now, we're around 64,000, basically at the wicks of the top of the last all-time high, same region, same area, and we could be getting a nice run up into that wave 5, that final wave 5 top. So that's what I'm thinking. Whether now if I put something else on, if I just put the 786 on, right, you can see in the first cycle the top came well before the 786. Okay, so the top was just 3-4 months. This cycle actually had it went on and on, and it went way beyond the 786. You can see in this cycle the 786 hit the top again, before we had a big crash down. And if we look at the 786 right now, it's around March 2025. So three of the two of the last three cycle, the 786 was a you can say a turning point. Here and here was a turning point. Here just continued. You know, the 786 is not as important for me as the 618. So we'll have to be looking at other things as well, just to notify us for the top. And there are many other factors I'll be looking at to see where the top is. But what I do think what will happen is after September, I think we will start seeing a run where Bitcoin does start, taking off, especially after this monthly candle, which at the moment is looking very, very bullish to me, with that long wick. Just a short-term update. We had the bounce off the 50,000 monthly level. Now where we are now, I would say, you're in a bit of a no man's land. It's not great to maybe go in here heavily because we've pumped so much yesterday and today we're just consolidating. We have a support around here. This is the weekly FVG gap area, which comes around 63,000 in that area. So you could get support here. You've got some liquidity, around this area. We got 59,000 support, but I do think price will probably end up going to the 67,000 area because that is a strong resistance, and then you might get a sort of a correction. But we'll see how it's getting along. But the next big resistance zone is this area between 66,000, and that's what I'm looking at going forward. But yeah, so long-term plan hasn't changed. If you want to do the short-term trading, that's up to you. But long term, this is why this video is especially about DCA, and I think it's very important that, especially for most of the people, they're mainly in alts. So I would, you should have some of your DCA done already by now, especially when Bitcoin went down to this level here. Now you're just, looking at what other levels and what other things you can accumulate depending on where price is. But that's my take on just the Bitcoin market at the moment.
Yeah, interesting updates, Oz. Thanks a lot for that. Now, interesting point that you made, and which is the core of this video as well, because we've had an overwhelming response from our community with regards to our DCA levels page on our website, and it's an invaluable resource for anybody who's looking into DCA in and DCA out. And we did discuss this on our audio podcast a few days ago, episode 66 of the Crypto Unplugged. Now, Oz, so what actually makes DCA such a powerful tool for us as crypto investors, and what makes it such a an important thing to look at when it comes to dollar cost averaging in and dollar cost averaging out?
You see, I think the thing is, if you have a chart, right? Now, if you have a chart, and you're looking at Solana, for example, right? You're looking at, and you want to know where to buy, and obviously this is this cycle here. Now, Solana, obviously, it bottomed, December 2022, and then now it just pumped for so many months, and now you're wondering where should I get in? Now, a lot of people probably got in at $200, and now they're thinking to themselves, it came all the way back down to $129, $115. But the thing is, what you want is an average price, and you want levels to go in so that you're not always exposed to buying the tops. So if you really want to get in early, say you have $5,000 or $10,000, you divide that equally. You could start off dividing that in 20%. So if you have $10,000, you can say, let me divide that into $2,000 in each to cut it up, and then on each level. And that's the key thing. Now you need to know the levels. It's not like, oh, I'm just going to buy it anywhere. I know a lot of people give that advice. I'm just going to buy every week and all that sort of stuff. I don't really agree to that. You should have levels where you want to buy, and just so that you can get that urge out, that FOMO out. You have a level that price will definitely hit, then maybe a level that it should hit, and maybe a level then if it does hit that, that's going to be great. So me personally, I normally have 3 levels. So I have a level that I know price is going to hit, so you put some money in there. Then a second level, I have secondary level where it should hit, and then a third level where it might not, but still you got a good enough position inside that. level. And the way I could do it, you know, the way I do it, maybe I'll put in 20% first, then in that main level I'll put in 50%, so that's 70% of my capital. Then I'll maybe leave, you know, 20 or 30% for the final level if it hits. So that's then you get an average price, and then an average price obviously is, you're not going all in, you know, at $200. You know, you could for example, for Solana, if this was an example, you can you know, you can, if you did buy the top, then you can now get, you know, I wouldn't, that's never a level anyway, to be honest. That $200 is never a level to buy. But for example, if you just put on an FVG that I use, now there's so many here, you might think, oh look, I want to buy this level here, I want to buy this level or this level here, but you don't know if it's going to come down to each of the levels. That's where analysis comes in. But for instance, it did hit this monthly level, which is $118. So you could have said, okay, I'm going to put in 20 or 30% on that level. I'm going to put 20-30% on this level if it comes here, and if it comes here, I'm going to put the rest here. But at least you get an average price, which then it decreases the FOMO, because what you don't want to go in is all in at one level, thinking, you know, this the bottom or it's going to pump, and then you're 50%, you know. Then let's just look at this here. If you did buy the top, right, and you would have been about 46%, or, you know, nearly 50% down, and that's the issue there. So that gets you a better average price, and then you know, then you can sleep, I would say, sleep a bit easy, and you'd have a good price, you know, going forward. And that's why we've created here, you know, obviously at Crypto Unplugged, we've given you the levels, and I think they're working out quite well at the moment.
Okay, so Oz, you know, the question obviously prompts talking about our DCA strategy, particularly on entering and exiting investments on 3 different price levels that you mentioned as part of a laddering approach. And I'm sure this method does help in maximizing profits safely. Now, based upon that, Oz, why is it that people do make the mistake of trying to get the bottom level when it comes to DCAing DCAing in their investments, and when it comes to trying to take their profits, they would wait for a level 3 or even a moon boy target that we have on our website? I mean, what's the mistake that people usually make?
So if you look here at the website, okay, I can't give you the whole thing because there's a lot of information here. There's a lot of notes I've written for the people who have subscribed, but I'll just give you a taste of what, how we do it. So, and this is a strategy that I would think that would be, you know, it'd be good for even the people who have subscribed. They might not be sure how to use this, you know, how to use a DCA sort of chart. So if we take render, because I think that was one of the first ones I've put on here. So obviously renders AI, put it on the 9th of August. And what you have with render, you have a DCA level, okay, at $6. Now that hit, I think renders at $6 now. So that's a level that was certain to be hit. Okay. So then what you have to decide is, how much of my capital, if I have $10,000, how much am I going to invest at $6? Am I going to put the whole 10,000 in? No, you would never do that, because that's not the strategy for DCA, right? So you would put a portion in there. Now, if it's that first level, I might say, you know what, I'll just go in with 20%. You know, 20% of my capital at $6, I think it's going to go lower. Okay, and that's why levels are so important. And the levels that we've done here are very accurate, in my opinion, and they're very, very, you know, they're proving to be accurate anyway at the moment. So, you know, that second level, which hit also, which was $4, I would say, okay, so we've got 3 levels. Okay, we got 6, 4, and you know, you could say $3 here, right? And what we want is basically an average price. Now, if we say I'm going to put equal amount of money in each of them, you know, if I've had $10,000, I'm going to put equal amount, like 3,000, whatever, 3,300 in each of them, then my average price would be around just over $4. But obviously it doesn't work like that. You're not going to put, you know, 33, you know, percent in each of the levels. It all depends on your personal strategy. Me personally, I would put about 20% in the first one. In this one, the DCA level 2, in all of my sheet, I would put the most amount of money in, whatever I want to do. And then this one, I would leave, you know, maybe 10% or 15% for that one, because the DCA level 3 might not hit. And that's something that, you know, is, if Bitcoin tanks, yes, it'll hit, like I've explained, but if it doesn't, then it wouldn't. So then, you know, if that doesn't hit and you're coming back to that $6 range, then okay, you could whatever 10-15% you can leave it as cash, or you can go back in around $6 once the price starts coming back up again. And then obviously, I'm not just I'm not just someone who dreams all the time. I have invalidation levels. So if render got to $1.20, then it's probably a bear market starting. And okay, you would lose money. Don't I would lose money here, but I wouldn't lose as much as because that would just be the start. Render would probably get down to cents. It'll be going way below that $1.20. So I'd get out with something at least. So my invalidation is there. I just like Bitcoin. If Bitcoin got to 30,000, which was the invalidation for this, Bitcoin would probably get down to like $10,000, maybe $10 or $15,000. So another 50% down from here. So at least you would save something. You might not save all your money. It's a risk, as in everything's a risk, and it's not financial advice, but nevertheless there is a safety built into these levels. And then you have an average price, so this average price would be just over $4. And then also the biggest thing I think people fail to understand is the profit taking, and that's where we have the DCA out strategy as well. And here again, I've done 4 levels for each, and so $21 is something I think is definitely going to happen without even thinking. So maybe I would do the same strategy again, 20% out here, DCA out 2. I think these first 2 levels will hit quite reasonably, so I'll maybe do 20%, maybe do more, majority of it here, 40-50%, maybe another 10-20% here depending, and then maybe I'll leave 5 or 10% for this Moonboy target. That it's just the Moonboy target is like the DCA level 3. It could happen, then again it might not happen. So that's the risk. So you want an average in price and the average out price. So if your average in price was around $4 and your average out price was around $30, or thereabouts, you've done well for this phase of the market, and this is the next leg up. So this is where it keeps you in check. So believe me, when render is at $21 or $27 or even $34, people are going to be screaming that render is going to $1,000, or $200-300. But this is where this sheet it makes you have a plan, and you don't round trip your gains, because what's going to happen after this is you're going to have another correction, and then what you want is cash for the next leg up, and that's the way I play it personally. So this is for DCAing in, you always want a plan. You don't want to. What people tend to look at is DCA level 3 probably, and the Moonboy. So I'm gonna get in at 270 and I'm gonna get out at $85. It doesn't work.
Yeah, unfortunately, yeah, exactly. It doesn't work like that. Now, Oz, look, given the volatile nature of crypto markets and how crucial do you think a resource like our DCA levels page on our website could be for crypto investors? Because this tool provides insights to managing investments in popular altcoins. Okay, so we've got Tau there, you've mentioned Render, we've got FET, we've got Injective, Cubic, Jasmine, even meme coins like Brett. And, these are some of the most popular altcoins. Could you discuss why such a tool might be like indispensable for both, someone who's new in the space or someone who's actually have an experience of going through certain cycles, and they're seasoned investors looking to maximize profits by minimizing risks through strategic DCA? Because the point is that, yeah, a lot of people do have the knowledge, they've made the investments, but like you mentioned, when it comes to a parabolic move in the market, when we are in the middle of a bull cycle, then panic does set in. So having a resource like this, with the most popular altcoins, how important is that?
Yeah, because at the end of the day, the thing is, look, just look here, right? Just look at this last cycle of Solana. You see, and I can personally, looking at this chart, I'm quite confident I know where we are exactly right now. So, I think we're around here personally, around this area here. And when you get this wave 3, wave 4, wave 5, it's quite apparent to me. Most of these charts, when you're here, around here, and you start making, I don't know, let's just say from here, Solana was an exception as well. You make 4,000 or 44x, right? You make a 44x, and then the next leg after that from Solana, so you have that dip, and then you make another from here. I think that's what 20 to that's 100x. So even from that wave 5 is 100x. from here, people were saying last cycle, Solana is going to 500. Solana is going to, it's going to basically take over everything. And then what happens? You get that 96% drop. So you've just, and what normally happens is you buy here, but you end up buying here as well, and you end up buying here. So all of these gains, you just round trip them all the way back down, and that's something that this sheet will not allow you to do, because you will lock in profits and you'll see the targets. You know, for example, even if you sold here, let's say you sold here in the last cycle, you sold Solana $100, but Solana went down to $8. If you DCA'd out an average cost of around $100 or $150, you were laughing in the last cycle, just in terms of Solana. You don't want to hold that bag all the way back down to a 90%, 95% drop, which will happen on most of these coins. So if you don't have that, plan of where you're going to sell and where you're going to buy, then it's just basically luck. You're going to be lucky if you keep your money, and most probable is that you will not. You'll end up you'll end up round tripping your gains all the way back down to the bear market lows. So this is what I'm doing at the moment, making the plan. We're making our plan, and we will, at the end of the day, if it works, which at the moment it seems like it's doing well. We've got our DCA targets, and I think it's going to be an interesting phase in this next wave 3. When it comes up, I think a lot of people are going to get sidetracked. A lot of people there's gonna be so much emotion happening, once prices, wherever it finishes, and then we'll see. If you don't have a plan, then hopefully you don't round trip your gains.
So Oz, at the moment we have about 16 or to 17. I think you've added another one today, Rio. Altcoins there, including Bitcoin as well, of course, and you've got the total free as well. Now, Oz, do we have any plans, for our viewers' benefit, to add more popular altcoins on our DCA page?
Yeah, so far, if you look at the screen here, these are all the altcoins we've added. So Tau, Injective, PAL, IR, Sol, Rose, Brett, DMTR, Demetria, and Rio. So yeah, I'm gonna plan to add more. We'll see what's popular amongst our community, what they want us to add. I think a few of them want us to add Orai and some other ones, but we'll look at them, and definitely we'll add them, because I think right now is a great time to add. If you look at the market anyway, in terms of if we look at especially with others' dominance, I think this is a great chart. Let's actually bring it here. And I think what we've had now is this low in the wave 2 low for others' dominance. Others' dominance is basically altcoin dominance, and I think you're going to start seeing a move up into this wave 3, similar to what we had here. So we had the first move up, wave 2 down, and then we had this wave 3, wave 4, wave 5. I think you're going to have the same wave 1 up, 2, you're going to have 3, 4, and then 5 finishing it off. So this is actually probably the best time to buy alts, personally. It's not financial advice, but this wave 2 coming down, just like last time, it was in December 2020, and Doc, 2020 December was one of the best times to buy alts.
Yep.
So I think it's the same sort of scenario we're working in, and then I think this wave 3 is going to kick off. And the dominance last time, it was from 6%, and in wave 3 it went all the way to 17%. Could have, right now dominance was around 9%. You could be getting into that 20% dominance, and that's going to be tremendous amount of gains going forward. So at the moment, we'll add some coins, just depending, if the viewers want to put in the comments what kind of alts we can cover. We'll add them in.
Okay, thanks Oz, and thank you viewers for joining us in this Crypto Unplugged video where we explored the ins and outs of DCA in crypto investing, and we hope you've gained some valuable insights that you can apply to your own investment strategy in this space. And if you've enjoyed this discussion or found it informative, please take a moment, make sure you like that, because your likes do help us create more crypto content. And don't forget to subscribe if you haven't already. And if you want to stay up to date with all our videos, turn on the notifications by clicking that bell icon. That way you'll be the first to know when we drop new fresh content. We love to hear your thoughts, like Oz mentioned, on DCA or any other crypto topics that you're passionate about. So drop your comments as well down below. And for more content, please check out our other videos, our podcast. And if you're interested in supporting us further, then check out our website, the markets unplugged.com. You'll find all of the details down below. Thanks again for watching, and remember, keep learning, keep investing wisely, and stay unplugged from the noise. And next time, this is Doc signing off with Oz. See you guys in the next video.